Hi Robuxio traders, welcome to our new market update. In this one, I want to show you current market conditions, our capital exposure in the portfolio and how we are playing with it, in general drawdowns, how we are dealing with drawdowns, and some comparison of our portfolio to crypto benchmark. Okay, so let's start. Let's check current total 3 crypto index. As you know, it is basically benchmark for crypto that is excluding Bitcoin and Ethereum. As you can see from the top, which was in March 24, we are in a drawdown of 25 to 30% right now, which is pretty huge. Over the last 30 days, we are in a drawdown of 25%. Crypto was basically falling in this last month. And fortunately, we were taking advantage of it and we were stabilizing our portfolio with short and mean reversion strategies. And it is something I want to show you in the following slide. Here in the middle of March, we got to the market top. From this market top, markets were basically falling. And you can see that the crypto index is basically in a drawdown of about 28% or so. Meanwhile, our portfolio, our high risk portfolio, is in a drawdown of about 8%. And if you trade medium or low risk portfolio, the drawdown is even lower. How is it possible? Because we don't trade long strategies only. Those are the ones that are making money from trending to the long side. But we are also trading short trend strategies and mean reversion strategies. And we are able to make money in different market regimes. It is a huge advantage compared to Bitcoin holding or any other crypto asset holding. We are taking advantage of trends, volatility, and inefficiencies, not from bull market, basically. So here you can see that, for example, in last 30 days, crypto is minus 25%, but we are basically flat and we are also nicely making money in last 2 weeks or so. So very important that we have all these strategies in the portfolio. Another thing, and it is also one of the questions I'm getting quite often, is why do we use as little of capital these days? Because what this chart is showing to you is capital exposure or capital usage. What it means, it is showing you how much capital of your account we are using on the daily basis. Basically, every bar is 1 day, and on y-axis you can see percentage of your capital used. So in the last 14 days, our capital usage was very, very low. In fact, you can see it here, we were using about 20% of your capital in the high risk portfolio and even less on medium and low risk portfolio. Why? Because there were simply no good opportunities to trade. You can see that at the latest stages of bull market or near to the bull market top, we were using up to 120% of your capital on high risk portfolio, slightly under 100% on medium risk portfolio, and about 80% on low risk portfolio. These days, we are really using much less because short strategies have slightly lower exposure because they are a little bit more riskier. That's why we want to risk slightly less capital per trade. And second, only one or two strategies are trading because others are basically filtered out with our regime filters or volatility filters. That's why you can see that the exposure is really getting from up to 120% to 20%. And it is moving by the characteristics of the market. If the market is in sync with our strategies, our exposure is usually growing. And if we want to be more conservative because the strategies, the portfolio somehow doesn't know in which market regime we are, our exposure is pretty low. And this was also the reason why we had such a low exposure in last 14 days, but it's not normal. Like average on high risk portfolio is about 25, is about 45%. One more thing I want to show you is the difference between V1 and V2 portfolio you are trading right now. The biggest difference you can see in these last 14 days. And the main difference is in the stability of the solution, because V1 was much more volatile because we weren't trading that many mean reversion and short trend strategies. And that's why the portfolio wasn't hedged that well as the V2 portfolio. And you can see it in the stability we are right now in this last month. V1 was still losing some money, and meanwhile V2 portfolio was really stable and it is even making some money. So that's perfect, and I'm pretty glad for that. One more topic I want to cover here are drawdowns, because drawdowns, as you already know, are pretty normal in trading. We are most of the time in some kind of drawdown, and it also depends on strategies we are trading. And you know that we are trading trend strategies and mean reversion strategies. Here you can see how many days in a drawdown we are with trend strategies only. And you can see that trend strategies, yes, they are making much more money than mean reversion strategies, but the disadvantage is that they tend to be much longer in the drawdown. Why? Because trend strategies need much longer movement to make money, and they really need long trends to be really profitable. That's why you can see that they are usually in a drawdown for quite a while. They make bunch of money and then they get back to a drawdown. Just for you, if in case you don't know, a drawdown is basically period when your account gets to some peak, to some top, and then it's starting losing some value. And until you get back to the last stop, you are in a drawdown. So you can see that trend strategies are in the drawdown much longer compared to mean reversion strategies, because those are in a drawdown only 64% of all trading days. But just on the equity curve, you can see how much stable these mean reversion strategies are. And it is because they don't need that much of the movement to make money, because they only need some big dip, some big short-term movement, which they are trading against. They are trading against this movement and they are speculating to get back to the mean. So that's why these strategies are much more stable, and this is also the reason why we have them in the portfolio. And of course, we have all these strategies in the portfolio, all these 15 strategies, and that's why our days in the drawdown is slightly lower. Basically, we are 88% of all days in a drawdown. Again, you can see that this number is huge. And why I'm showing it to you is that you need to be prepared for being in a drawdown. Sometimes it will be a longer one. sometimes a shorter one, sometimes a deeper one, sometimes it will be really very shallow. We never know. We only know that we trade all-weather solution that can take advantage of basically any market environment, but we need movement. And you can see these last 7, 8 days, markets are falling and we are making money with our short trend strategies. So this is it. Be prepared for it. We are performing well. We just need to be patient and we need to wait for the big numbers, for the overall statistics to play out. Okay, that's it. Thank you for joining us for this market update. And if you have any other question, feel free to ask. Happy trading. Bye.